90 seconds. Yeah! You guys ready? Please type in the chat. Are you risk on or risk off? All right. It's time to get going on. Let's get on with it. Risk on or risk off? Yeah, risk off today. Yeah, everybody's taking some profit. Yeah, we were at the profit targets yesterday. Could be a rabbit. Could be. So let's get going. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I salute you. So let's get going. Let's make that it. Yeah, let's just get on with it. Got things to go, things to go, things to do, places to go. Yeah. Anyways, so let's take a look around the world. Let's start with boop, boop, doop, 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 boop. We'll go with the indices. Which reminds me, I did a, right? Oh, Arve's in Spain. Nice. North or south? Let me go to youtube.com at QuantBox. Today we did a great video, which I did upload, actually. This one, Trade Like a Pro. This is today's video, and we go through the step-by-step process of putting our... Oh, Mallorca. Very nice. Yeah, Majorca's nice. Step-by-step process here. Okay, very process focused. I think you might like it. For example, and the way that what we used, of course, is QuantBox. And, you know, it's using this data, for example, when you look at something like this to organize your trading thoughts. How do you turn these into trading plans? Okay. The other thing that we could do, you know, once you get a trading plan put together, so let's move off of this, for example. Let's go back to where I think I was on this Euro one. And you get something like this. You see how it says QB Bull 12. So the next thing that you could do is, once you've identified the opportunities, then you could have your technical analyst look for bullish opportunities for you. They may not exist today. There might be bearish opportunities today. Fine, but you're not a bear, so what do you care? What's your problem? What's your problem? What do you care? Look, so we got that, and I'll save it. And so now you're combining technical and fundamental analysis. Oh, look at that. There's a trade plan. Okay, a long time ago. So it's already in play. So that's not helpful. Well, I mean, it might be helpful if you weren't trading it yet. But the next thing is, you know, what if in the next hour or two, suddenly you see, like on a 15-minute channel, TRADARS goes, ooh, euro dollar bullish. Well, that would be the confirmation down in here, right? That it's happening. So does that look bullish to you right now? No. So take a pass. Oh, but it's falling. Are you a bull or a bear? Okay. Remember, you stand for something or you fall for anything. Yep. Simple enough. While we're up here, get yourself an ECN. Okay. Stop being B-booked by your broker. A books and B books. Unnecessary if you're an ECN. Get yourself an ECN. Oh, there it is. Okay, get yourself an ECN. I recommend Trader's Way. Take a look. Okay, so you should be organizing your thoughts. You could use TRADARS to help you do the technical analysis. Because the other thing is, you might say, well, Wayne, I don't actually know when to buy. You know that you want to buy it, and you know you want to buy it around here, but you still don't know when to pull the trigger. Well, TRADARS looks at over a dozen things that would be a pattern that shows bullishness. So imagine now you just wait for your technical analyst to say, yeah, a technical pattern has presented itself on euro dollar, and it's a bullish pattern. And you're already fundamentally a bull. You labeled your chart. You're a bull, and you're a strong bull. So now you're just waiting for the technical confirmation. So have your analyst work for you. Why do you do all the work yourself? Huh? Let your analyst do the grunt work. Okay, you see? That's one way to use it. So we're getting close to an apex. We'll see. The other thing is, like, if you are a swing trader, you see the obvious swing to the upside, right? What's the simple pattern here for swing traders? Okay. What's the simple pattern for swing traders? It's not this sort of wedgie pennant type thing that I'm showing. If you were a bull and you were a swing trader, that's right. Okay. This is the pattern. So if you were a bull, and again, if you don't know how to be a bull or a bear, QuantBox will just give you the decision. It'll make the decision for you because it works for you. You see? So you're like, oh, you're a bull. So you're going to take a bullish swing trade, right? Well, what else would you do? That's the confusing part. What is the other choice? Trade against the trend. Well, I wouldn't recommend that under any circumstance, right? So there's a lot of logic here, and this should be shaping the way that you're setting up your trade. Okay? And if you're not doing that, you're not a bull. That's okay. Yep. Yeah. It's selling puts, though. That's interesting, huh? Yeah. So I recommend watching today's QuantBox video. I think for many people it'll be helpful. That step-by-step process. Well, right. So like what David is saying is if euro falls, he wants to buy it, and you can use options to do that. And the interesting thing, like, it's probably easier for people to like think about like the stock market. You could say, hey, I want to own the stock market if it drops 5%. Now, then you can then sell a contract to say to somebody else, if the market falls 5%, you can take them out. You'll take their position from them. So you get paid to be someone else's stop loss, which is great because if you want to own it anyways, you're getting paid to contractually be required to do it, right? You're contractually obligated to make that trade with somebody else. So they buy the contract that you guarantee to take them out of their position if price falls by 5%. Now you're like, well, that's cool because I want to buy it and own it at 5% lower, plus you get some cash. So if it doesn't fall 5%, if it falls 3%, and then goes back up, well, you got some money. You collected income. That's what he's talking about. That, yeah. Alex says, yeah, that was good, getting paid to be someone else's stop loss. Yeah, well, that's exactly what an options contract is. Okay, so that's the nice thing. Is that you have this level of income. Okay. And then once you are in that position, and let's say because the pullback was big that this thing lags for a while, maybe it's seasonality or something, then you can sell the other contract which is the put side, or sorry, the call side, and you're like, hey, if this goes up 2%, I'll sell it to you because it's bullish again. And you do that in particular in a sideways market where everyone thinks it's going to go up, but maybe they don't know anything about seasonality. So everyone feels like they're bullish, but you got to remember most people in this market are not very smart. That's okay. That's okay. So what you do is you're like, hey, bro, it's August, right? And you sell a contract. So you write this contract and you sell it to somebody. And it's like, well, if the S&P 500 goes up 2% this month, I'll sell my position to you. And they're like, okay, great. And I'm going to charge you $500 for this. And they're like, great, I'll buy that contract. But you know, and I don't know, you'd have to do your research. But let's say there's a 90% chance it ain't going to happen. So two things are likely to be the outcome. 90% chance you're going to keep the $500, or if you're wrong, you get the $500 plus you sell the S&P 500 for 2% above the price that you paid. So you're still double profitable. It's not like you were wrong and lost money. So on your position, you probably made a couple of grand, and then on the option, you collected $500. You're like, oh, dang it, now I'm out, but with $2,500 in your bank account, right? Now, what you're hoping, though, is you stay in the position. Yeah, you're hoping to sell worthless contracts to people. Yeah, McKenna, you join investorbootcamp.com for $88 a year and you get them included. They're included for the $88. I don't know, did you join? Did you? Let's see if we can explore. Well, I don't think there's like a how do you find them? Well, let's see. Okay, they're like what I'm saying is they're not hidden. So I'll log in. And it says chart toolkit for MT4, MT5. Right? They're not hidden. Oh, yeah, predictive pivot points. That could be them. Yeah, no, it's all here. It's all good. Biased pivot points. There's more there. So what most people do is they just run this installer. Now here's the thing. This is for people that are not very familiar. With the platform. Okay. And so now it's like it's going to install for me. Now, there are two kinds of people in this world. One that uses YouTube and one that doesn't. For some reason, when people don't know how to install them, they don't go to YouTube and you're like, where do you install your files on MT4? Pretty basic. And there's probably 25,000 videos on how to do it. So for some people, it's a quick search, boom. For those that don't know how to do it, you have to go to File, okay, Open Data folder, and find out where your MT4 installation is located on your computer. Right? So you copy this address. That's it. That's all I have to do. Okay, oops. Copy that address. Now, where's the installer? Oops. And then you tell the installer where you're obviously installing it in your downloads is wrong. So you would, okay, and then you go next. And I already have all this installed, so it's like, do you want to do it already? No. But that's as easy, and you run it, and 5 seconds later, you got all this stuff. Some people struggle with, they don't know where the folder is. I'm like, dude, Google it. Why don't you do a training course on it? I think there is, actually, inside of FX Bootcamp. I think it is, actually. I think there is one. So anyway, some people get hung up on that. I know I sound pissy. I'm tired. It's right. It's late in the day. I've been working for hours. But I'm pretty sure there is a training course that tells you how to install files, how to install indicators and templates, right? So people get all mad at me. How come you don't do it that way? How come you don't have a lesson? I'm like, dude, we do. But anyways. Yeah. Yeah, David talks about turning, using options as a carry strategy. And it is so like, right? Going back to David's comments, what you do, and this is very common in the stock market, for example, and maybe it's just easier to understand. But you sell an options contract to buy what you want to own, and then you sell an options contract to sell what you want to sell, or just earn income on what you want to hold. And then there are strategies of, like, let's say you sell an options contract 2% above the market. And if it doesn't go up 2%, you get to keep the money. But if it goes, but then you can then buy someone else's contract. So now you're selling an option. Then you enter into someone else's contract to buy it, let's say 2.5 or 3% above the market. So that one you might lose $50, but the other one you might pick up $100. But what happens is if it doesn't go up, you keep the $100, but you lose the 50. So you still have the 50. You own the underlying asset, but if it goes up to 2%, you collect the 2% plus you caught the 100, but you spent the 50 that gets you back in, and now you're back into your previous trade. Okay. Okay. That's so you go. Burn, that would be for Americans. Okay. And it's not a change at Trader's Way. It's a change at MetaQuotes. Richard says, Fed speak, shaping the dollar, causing blah, 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 blah. Maybe. I look at it differently. So on Friday, I exited my trades here. That kind of thing, right? Not Fed speak, it's just that's what you should do. So is it Fed speak? Is it the news tomorrow? I'm like, dude, let's get real. Hang on. Let me clear this. Okay. Stupid drawing tool. Come on now. All right. Now I got to zoom in a little bit. All right. are Fed speeches impacting? Oh, I can't just maybe on the 1 hour. Okay. Are the Fed speeches shaping the value of the dollar today? That's the big question. Well, we know the big news event is Wednesday, Fed meeting, or not Fed meeting minutes, and Thursday, NVIDIA reporting. Okay. So we know that to be true. It's self-evident. And I'm sure there are talking heads on TV that would say such a thing, Richard. So I don't know if you're just quoting what you heard somebody else say. And I pick on you for this, so I don't mean to beat you down, man. I don't. But I am trying to make a point to you and to others. So, right? So anyways, this, okay, happened before any Fed speak today. Is it possible that this market is just supposed to fall and there's no other reason? Right. Yeah, no, I know, Richard, but what I'm saying is if this was up and we were on our way to Dow 5,500, you know what? The people on TV would say, oh, that's because of the Fed speeches. So what's happening is people are looking at the market and then trying to explain it. The shaman made the sun go away because you didn't give him virgins. Well, the shaman knows that he has the solar eclipse cycle written down somewhere. That's the shadow of the moon passing in front of the sun. You know, like it's not magic, right? So people are trying to explain things with what seems to be reasonable logic. I could argue that this is coming down because it's supposed to. So, 20-something days ago, we identified this as the price in which the S&P 500 is likely to stop going up. And we knew that 3 weeks before Fed speeches right now. So I would argue that, right? That's all. I would argue that. Like, if you looked at the chart, you're like, that's where it's supposed to fall. And now it's falling. Yeah, well, that's what it's supposed to do. Okay? And right? So that's all. So thank you for, allowing me to push that idea. Okay. Oh, and again, burned. It's not Trader's Way. It's MetaQuotes. MetaQuotes pulled the plug at all brokerage firms and all prop facilities for all American clients. It has nothing to do with Trader's Way. But are they impacted? Yeah. Okay. So Richard says, so technically charts can tell us sentiment. Well, yes, that's all a chart is. Okay. Remember, it's aggregate buying and aggregate selling. Now, I can get pretty deep into the weeds with QuantBox, for example. So let me bring up the QB. And I'll show you like a cool thing about how to read your charts better. And it's not on your chart. Okay, so the question that Richard said is, so you could look at this as sentiment. Yes, well, one of the things that you want to consider is that on the left, if you're going to consider this a double top, on the left, it's bulls selling. On the right, it could be, and probably is, bears selling. And there's a big difference. So where do you get this kind of data? How do you know this stuff? Well, let me show you. So you go to your COT report, for example. Let me expand this out. Okay, and I can separate. So here's euro dollar. Euro, okay, is green. Dollar is red. And this is the, all the buyers minus all the sellers of euro, okay, and all the buyers and sellers of dollar. And right now, this market is neutral. So it's the net long minus the short, net long minus the short of both euro and dollar. Okay, so I could tell you, right? I can tell you if this market was extremely bullish, which based on this information, it's not. Okay, over time there's been buyers of dollars and there's been buyers of euro. They should be diverging. What we want to see is the red line, again in US dollar, we want to see this falling. So risk on, okay, most of this year has been risk on, so notice the red line's been falling. And Europe has been stuck in its central banking policy, which also depressed the value of the euro. What we want to see over the next 12 months, let's say, is a divergence. I want to see the red line drop into the negative territory, and I want to see the green line rise into positive territory, and which would be very risk on. Maybe that won't happen until next year. But when that happens, I know people are actually buying euro and actually selling dollar. When you look at the price charts, you may not see that. But it helps me, right? So the euro dollar's going up since like April something, but when you actually look at the positioning of the market, it's quite neutral. So this up hasn't even begun, is one way to look at it. And you can switch and break these apart. Okay, you can switch them up, let it load. Okay, and you can see the market is positioned as selling New Zealand dollar. So it's interesting when you see euro dollar rising, Kiwi dollar rising, nobody's actually buying the Kiwi. What? The market is net short Kiwi. Kiwi dollar's rising. Maybe it has something to do with the US dollar, not the New Zealand dollar. The market doesn't like the New Zealand dollar. 61.25% are short the New Zealand dollar. And I can show it to you here over time, week over week over week. It's not more short, but it is short. And of course, subscribers to QuantBox have this for pretty much everything. Okay. Gold, dollar. Okay. So what do you think? Somewhere around here was probably the appropriate time to buy gold, right? Oh, I got to go even further back. So it was right here. So QuantBox, if you use the COT report, right here, the second week of December, is where positioning of US dollar and gold changed to be fundamentally bullish. Technically, though, what happened? We were in a range for a couple of months and then gone. So you had 2 months to prepare using hardcore facts. Okay. It's nice, isn't it? Okay. Nice, isn't it? Yeah. Yeah, it's beautiful. Well, so the question is, what about, volume data and stuff? QuantBox is so good at this point with the appropriate data that there's not much more for me to add. Like, there's so much information for you to make a decision that adding more similar data adds no value and instead adds a level of complexity. What I'm looking at is different ways to measure the same stuff. So like euro futures volume, like, dude, you're either going to buy the euro or you're not. Like, euro dollar is listed as a 12. Like for example, let me just try to be like clear, right? Like, look, it says very bullish euro dollar 11. That's when you're like, well, I want to buy it, but I need some futures volume. Like, no, you don't, dude. You either move on to like set that up as a buy or you don't. More data wouldn't help. But I'll tell you what does, and I've added this T-bill analysis, and we're adding a new thing to this risk gauge. And it's supposed to be added soon. It's on the developer list. But what I want is different measures that can lead me to know whether today I want to buy the euro or not. In general, I might want to buy the euro. But today, okay, and so this is measuring, and I'll have to zoom in here. This is the yield on the 2-year treasury. So this is the money market. And it updates every day, and then we run an 8-day moving average. And right now, it's either risk is a little high or neutral, depending on how you interpret this. It's not a risk on day right now. According to whom? The treasury market. Not stock traders. Okay, fixed income sovereign money market traders. And that's a very deep liquid market. Okay? Okay, so what are they saying? Not today, brother. Now, maybe euro changes throughout the day. Or maybe this is a sign that people are hoarding their cash. They went to cash, and they're waiting for either the Fed meeting minutes or the NVIDIA news trade. Which gets us back to, isn't this why we're watching the stock market top out at, right? This is why we haven't gone up. We're waiting. And we knew that yesterday by looking at, so it was yesterday that our analysis of the yield on the 2-year Treasury popped up, which says the stock market's not going up today. So think of it this way. This going up, high levels of inflation. This coming down, falling inflation. So we just popped up. That's risk off. And we knew that yesterday. And so now, today, we're having a down day in some of these markets. I'm like, yeah, we knew that yesterday. And obviously, you guys know because most of you said risk off today. And I think tentatively, you're like, risk off for now, but I'll see you on Friday, right? I'll see you on Friday as a higher high. Yeah, that kind of thing. So that makes sense. So like adding I guess you would say it this way, right? Right, Richard? Instead of adding more data measuring the same thing, we want sort of more, it's not uncorrelated, but we want different measures of different things. So like when I do go to the risk gauge, I'm making a determination of the underlying intrinsic trend by looking at what all the market's doing, the entire financial market, metals traders, okay, bond traders, yen, dollar, stock traders, volatility, okay? This is volatility, but this is part of the options market. And I'm bringing in another version to measure something like that. So we're going to look at like what are all, because none of these guys talk to each other, presumably, right? Someone that trades US dollar all day isn't talking to people at the S&P 500, and they're not really talking to gold traders. So we're looking at all these different markets. And if you remember the old trading pits, they'd have a trading pit for gold, another one for VIX, another one for S&P 500. These people were spread all out over the floor into all their individual cohorts. Now what I'm doing is I'm looking at all of them and trying to look at each individual part and say, well, what is it that they're trading? What's the underlying thesis? What's the trend in that trading pit? And they're like, okay, they're doing something that is indicative of risk off. Let's say it's a down day today. Okay. But then you look at all of them and they're all doing down days today. Then that's the trend today. Okay. And so I want to add more of that and less of the same. You're either going to buy the euro or you're not. And that's just based on basic price action, basic macroeconomic analysis. And so adding some volume data, that's a trade, but it's not a strategy. Quantbox doesn't put you into trades. It aligns your strategy with actual market conditions. Yeah. Big distinction. Okay. So like, if we look at, let's go back to this. Okay. Euro yen. Quantbox labels it as a 6. Do I want to sell this? Not in a million years. See? How wonderful is that? How many people here would appreciate that level of clarity? Oh my God, Wayne, it might be a double top. I think I should sell it. And I look at him like, not me. Oh, but Wayne, it's an M3. Yeah, you're right. Look, it might fall. It really could. Okay? This whole wick is scary for sure. And if I was a bear, okay, this would be a very good price. to sell. But based on macroeconomic analysis, that doesn't make any sense. Now, the Central Bank of Japan might make that happen, but that is a black swan. It's not quite a black swan because you can predict that it could happen but nonetheless. So what do I know? If you compare the European and Japanese economy, I'm moderately confident this should go up. It's been falling for 16 hours. But see, I love that. I love that because I'm a bull. I want it to fall. Good. Great. So, what is our job then? Okay. I've already done it. Okay. Somewhere around there, I'm very interested in buying this and taking it up. Well, what about the double top? I'm a bull. There's no resistance. Resistance is futile. Okay? If I took it seriously, then I'm not a confident bull. I'm riding the 4-hour 21. There is no resistance. So this is going to go up and I'm going to make money. Well, I actually don't know, but that's my intent. That's what a strategy is. That's what a plan is. If I wasn't sure, then I shouldn't be a Forex trader. If you pull the trigger and you're not sure if you're going to make money, that's where you're screwing up. You should be shocked you didn't make money. Now, often you can be shocked 40% of the time, but the thing is you're so clear on what your intent is that you're shocked you bought it and it fell lower. You're like, what kind of loser sold it at the 4-hour 21? What an idiot. Well, never underestimate somebody else's stupidity. Okay? They might be taking it down to the daily 21. All right, well, then we'll definitely back out before then. This is just one little pissy little trade plan. But I'll tell you what, you should be hot to go HOTTOGO on this number. If you're a bull, dude, look at this. If you're a bull, you need to be ready. Look at today's buy zone, today's 21, today's roll reversal, tomorrow's buy zone. It's like, dude, you got to get in it to win it. And you have a stop loss with a predefined loss. It's not going to be bad. You might lose money, but it's not going to be bad. We discussed this at Investor Bootcamp the other day, with people having fear and anxiety around losing. And I'm like, you need to change your psychology. A professional trader has fear and anxiety around missing a good trade. And a loss is like water off a duck's back. Okay? Because they never take big losses, ever. If you need that, be a degenerate gambler. There are a lot of hedge funds I disrespect because they made money gambling. I hate that movie, The Big Short. I hate it. It's the worst education for a non-trader because people that don't know anything about Wall Street watch that movie and go, that's what Wall Street's like. Or The Wolf of Wall Street. People watch that and they're like, that's what Wall Street's like. No, that guy was a thief. He was a liar and a fraud. That's not what Wall Street's like. So anyways, a small loss is okay. but missing an opportunity because you're afraid or you don't have clarity in your strategy, then that's not cool. Okay? So again, you can go out and say, you're a bull, you're moderately bullish, and you're going to buy a dip at this roll reversal, kick it off the 21 if you get the trade set up on a small time frame. So you have now permission to engage. You see, we're at the daily pivot. Call it in. Call it into the chain of command. Permission to engage. Good. You got the green light, son. Take the safety off. Okay? Time to focus. Time to go to work. See, we're approaching the 4-hour 21. 1 hour 55. 15,200. Oh my God, there's a logic behind my settings. Ha ha ha! Ho ho ho! Wee wee wee! It's crazy, I know, right? Well, Andrew, that's part of QuantBox. If you have retail heavily long or short, you trade against retail. Yeah. But I consider it like long money versus short money, not in direction, but in duration. So institutional investors are longer term traders, right? And retail traders are much shorter term traders. And that's how I want to look at it. Okay. So you sit back and you wait. Okay. And we're getting ready now. Quick on the draw. I thought it'd be dead. Yeah. Yeah. Oh, look, red candles. Everybody sell. No, 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 no. Turn that off. Turn that off. Red candles do not mean sell. It means you should have sold it 7 hours ago when it was green candles. You have to get past it's falling, now I need to do something. That's amateur hour. That's not boss mode. Okay? So find your line. Okay? Find your line. And now you wait. Okay? It's like if you were going to be a bear, you had a double top and a triple top, and you didn't take it. Well, then you're not a bear. Now you want to be a bear because it's falling and has red candles and made a newer lower low. You're not doing it right if that's how you work. You're not setting your trades up in advance. Are you planning tomorrow right now, or are you trying to figure out what to do today? It's like 10 o'clock in the morning and I'm done. What do you mean? You're just starting? You can't do that. You need to be planning tomorrow. Okay, one last announcement. Today at 4 o'clock, I'm doing the Week on the Street where we download and read all the economic reports. Okay? Yeah, if Arve tunes in, you get to see what a Nordic person looks like when they spend time on a sunny island. Could be glowing red, pink, like a cranberry. I don't know, at least that's what happens to a Kenyadan. Oh, you should see the color of my feet when I put them in the swimming pool. They glow like they're made out of snow. They're even whiter in the swimming pool. So anyway, so if you're part of the... and I have to send out an email. I just don't have time. I have to send out an email. So look, let's say you're new to Investor Bootcamp. You join, you pay $88 a year. You get instant access to like 100 hours of training lectures. Okay. Then you should upgrade to the swing trading group. $99 a month. On Tuesdays, we do all the economic research that 95% of traders are not capable of or unwilling to do. So I actually do the homework with you. And not many people can. Okay. On Wednesdays, we're starting a new session, heavily focused on tactical perfection through some-on-one feedback and heavily focused on simulation. And then Thursdays, we spend 2 to 3 hours planning the week ahead on a Thursday, because very often Thursday or Friday we enter our trades for next week. So by the time Monday or Tuesday comes along, we're almost at profit targets. So we have to be ahead of the market, you have to plan ahead so that you set up your ambushes in the right locations. And so now it's 3 times a week, which probably adds up to, let's say, 2, certainly 4, probably 5, probably 6 hours a week. That's 24 hours a month. And it's $99. Like, holy schnickerschnocker. So if you're not a member of the Investor Bootcamp swing trading group, you need to sign up. If you don't have 3 years of trading experience, or even if you do, but you're not good, you need to start there. There's a lot of things that we cover that you probably can't get anywhere else, and that's stupid cheap. So anyways, today is a lot of fun. We're going to be downloading some reports. Why is it fun? Well, we don't just read the numbers. We talk about the meaning of the numbers, or we read the subcomponent stuff, and we find data in these reports that are not covered by the journalist majors making 30 grand a year over at some, financial news outlet. They're journalist majors. They're not economists. They're not traders. They don't run a book every day. They just write articles for people that have no serious knowledge of economics. Well, we talk about it in seriousness. We get the deeper dive. We see the humanity in the numbers. And then, of course, it's really cool to read the same report from 3 different countries back to back to back, because they all like PMIs happening in the same week. So you're like, all right, we're reading Australia PMI, and then New Zealand PMI, and then Canada PMI, and the United States PMI, Europe PMI. And you're like, oh, you can compare and contrast. It's so clear. And you see in the writing the personality of the central banks and the government, agencies. So anyways, that's why I think it's cool. Sure, economics might be boring, but it's profitable. So anyways, that's today. Okay? I hope $99 a month won't hold you back from becoming a better trader. Peace on earth. May the pips be with you. May your profits be above average. I'll see you.